Something huge is happening to your money right now, and most people have no idea it's coming. The kind of change that will impact every penny you make, save, and invest. A financial reset is underway, and trust me, this is not something you can afford to ignore. If you don't understand what's about to happen, you could find yourself losing money while everyone around you gets richer. This is the kind of thing that could leave you behind if you're not paying attention. And if you don't know what to do now, you'll regret it later. Here's the thing, this isn't some temporary market shift or a small blip that's going to disappear next week. No, what's unfolding is a massive, systemic reset. It's a fundamental change in the way money works that's going to affect your savings account, your investments, your cost of living, and your future financial security. And the craziest part? Most people are completely oblivious to it. But the consequences, they're going to hit hard and fast. Whether you like it or not, this reset is coming, so you better be ready. In this video, I'm going to break it all down for you. I'm going to explain exactly what's going on, why it's going to affect your finances, and most importantly, what you need to do right now to stay ahead. Because if you don't act now, you could lose out, just like millions did the last time this happened. So stay with me, because what I'm about to share could be the difference between building wealth and watching it slip away. Right now, the Federal Reserve is quietly making moves that will completely change how your money works. They're adjusting the levers of the financial system, and what they're doing is laying the groundwork for a massive reset. But here's the thing, this isn't the first time they've pulled this stunt. In fact, this is a strategy they've used before, and if you didn't take action last time, you probably felt the sting. But now, this reset is gearing up again, and it's coming faster than you think. So, what's actually happening? The Fed is pulling back on tightening measures, something they've been doing for the last few years to fight inflation. But when they stop tightening, that's just the beginning of a new cycle. You see, the system isn't built to be stable, it's designed to be manipulated. And when the Fed starts loosening their grip, everything changes. Money starts flowing again, credit becomes easier to get, and while some people will take advantage of this, others will get left behind. So, let's break it down. Imagine the economy like a giant bathtub. The Fed controls the faucet. When they want the economy to grow, they open the faucet wide. Money pours in, interest rates drop, and suddenly it's cheaper to borrow money. Businesses expand, people buy homes, the stock market climbs. Everyone feels richer. But here's the catch. If the faucet stays on too long, the bathtub starts to overflow. That's inflation. Your money loses value. The prices of everything go up, and your savings don't stretch as far. The Fed knows this, which is why they try to stop the overflow by tightening things up. They reduce the flow. But when they stop tightening, when they pause and let that faucet drip just a little bit, money starts flowing again. The system resets, and here's where it gets interesting. When the Fed starts loosening the faucet, that's when inflation starts to creep back in. You might not see it immediately, but over time, it begins to eat away at the value of your money. Suddenly, that dollar in your pocket doesn't stretch as far as it used to. Prices start rising, groceries cost more, gas goes up, and even your rent begins to climb. Inflation is the silent killer of purchasing power, and when the Fed loosens the reins, it's like turning the faucet back on. It doesn't take long before inflation starts to spike again. And here's the real problem. As inflation rises, your savings will lose value faster than you think. While your bank account may still show that same number, it buys less and less every year. Meanwhile, those who own assets, stocks, real estate, businesses, are getting richer. The value of their assets increases as the Fed inflates the system, while your money just sits there, losing purchasing power. It's a cruel game, but it's the game the system is built on. This cycle is nothing new. It's been repeating for decades. The system pumps money into the economy to keep it growing, but when inflation gets out of hand, they tighten things up, only to loosen the faucet again when they want to restart the cycle. This isn't an accident. It's how the system works, and it always benefits those at the top, the asset owners, while leaving the rest of us behind. Take Dave, for example. Dave is 42, works a steady job, makes $80,000 a year, and has been saving diligently.
He's got about $60,000 sitting in his savings account, and he's proud of it. But what he doesn't realize is that his savings are losing value every day. In 2020, that $60,000 could have bought a lot more than it can today. His rent's gone up 30%, his groceries have doubled, and his car insurance is high sky. His savings are earning him 3% interest, but inflation is likely eating away at $3,000 or $4,000 of his purchasing power every year. He's getting poorer without even realizing it. Meanwhile, Sarah, his coworker, made a different choice. She put that same $60,000 into an S&P 500 indexed fund back in 2020. It's now worth $90,000. She's up 50%, not because she's smarter, but because she understood the game. Her wealth is growing because she's invested in assets that keep up with inflation, while Dave's money just sits there, getting eroded year after year. You're faced with a critical choice right now. Keep your money in cash and watch it slowly lose value to inflation, or take action and invest in assets that can grow faster than inflation. The decision is yours, but here's the reality. If you choose to keep your money on the sidelines, you're essentially losing money every single year. It's like watching your wealth evaporate. On the other hand, if you choose to invest wisely, you have the chance to build real wealth that not only protects you from inflation, but even outpaces it. So, what's the strategy? The key is simple. Invest in low-cost, diversified index funds. These funds track the overall market, and over time they grow, sometimes slowly, but consistently. The beauty of index funds is that you don't need to be a stock market genius to benefit from them. You don't need to time the market, you don't need to pick individual stocks. All you need is to invest in a fund that mirrors the market and let time do the work for you. Now, let me emphasize something crucial. The stock market has never had a negative return over any 20-year period, not once. It's not a guarantee that the market will always go up, but history shows that over the long term, it consistently outperforms any other investment strategy. The formula is simple. Spend less than you earn, invest the difference, and hold for decades. That's it. No gimmicks, no get-rich-quick schemes, just long-term, consistent investing in a diversified portfolio. The Federal Reserve doesn't work for you. They don't care about your wealth. Their job is to stabilize the system, and that means inflating asset prices. When they make decisions, it's not about you. It's about keeping the financial system running smoothly, keeping banks, big corporations, and the markets in check. The way they do that? By pumping money into the economy, which inflates the value of assets like stocks and real estate. That's where the focus is. If you own assets, you benefit. If you don't, well, you get left behind. And that brings us to the concept of the K-shaped recovery. This isn't just a buzzword, it's the harsh reality of what happens when the system is rigged in favor of the wealthy. While the rich saw their assets skyrocket in value, wage earners, those working regular jobs, struggled to keep up. Home prices surged, the stock market soared, but wages, they barely budged. People at the top saw their net worth increase exponentially, while those at the bottom watched inflation eat away at their purchasing power. This is the K-shaped recovery. The rich get richer, and the rest of us fall further behind. This isn't a conspiracy. It's just how the system works. The Federal Reserve isn't trying to make the economy fair or help you build wealth. Their job is to stabilize the system, and to do that, they have to keep asset prices from crashing. They'll inflate those prices to keep the financial system from collapsing, and in the process, they'll create even more wealth inequality. It's a brutal truth, but it's the system we're all operating within. So, what can you do to stay ahead in this system? The answer is simple. Start investing. And don't think you need thousands of dollars to begin. You don't. You can start with just $10 a week. The key here is not how much you start with, but that you actually start. The earlier you begin, the more time your money has to grow. It's all about consistency. You don't need to be a financial expert. You just need to commit to putting your money to work for you, no matter how small the amount.
Small steps can lead to big impact. Think about it. $10 a week doesn't sound like much, but over a year, that's $520. Invest that in a low-cost index fund, and that $520 can grow into a much larger sum over time. The power of compound interest will start to work in your favor.
The earlier you start, the greater the return. And even if you can't contribute a lot right now, what matters most is that you're consistent. Every week, every month, you're putting your money to work instead of letting it sit idly in a savings account, losing value to inflation. There's absolutely no excuse to sit on the sidelines anymore. There's no barrier to entry. All you need is the right knowledge and a little momentum. The tools are available to you right now: low-cost brokerage accounts, index funds, automated investing platforms. You don't need to be rich to invest. You don't need a financial degree to understand the basics. All you need is to get started, and once you do, it becomes easier with time. Don't wait for the perfect moment. The perfect moment is now. So, what can you expect in the coming months? Based on what's happening right now, here's what's likely to unfold over the next 12 to 18 months. The Federal Reserve is likely to cut interest rates further. They've already made cuts, and as the economic data continues to soften, they'll probably keep lowering rates. When interest rates drop, borrowing gets cheaper, and that means more money will flow into the economy, driving asset prices up and pushing inflation higher. The reserve management program will also expand. It's a quiet but powerful move. The Fed will continue buying short-term Treasury bills to maintain liquidity in the system. While they won't call it quantitative easing, it has the same effect: more money flowing into the economy, which means more inflation. And as that money circulates, it pushes up the value of assets, especially stocks and real estate. Speaking of asset prices, they're going to go up. As the Fed continues to loosen, more money will chase fewer goods, which will push up prices in the markets. So if you're invested in assets, you could see some gains. But if you're sitting on cash, you're losing out. And the worst part? If you're not in the market when these moves happen, you'll miss out on the growth. Finally, inflation will creep back. It might not hit 9% again, but expect it to rise. Even a modest increase in inflation means that everything, your rent, groceries, gas, and everyday expenses will get more expensive. You'll feel the pressure, and if your income isn't growing at the same pace, you'll be stretched thinner. The ultimate question is this: when all of this happens again, will you be ready? Or will you be stuck in the cycle of getting poorer while everyone else gets richer? This is the moment to act. Don't wait for the inevitable to catch you off guard. The time to position yourself for success is right now. Let me reinforce the key message here. Time in the market beats timing the market. Stop waiting for the perfect time, because that time never comes. If you keep waiting for the right moment to invest, you'll miss out. The market will keep moving, and you'll be left behind. The time to act is now, not next month, not next year. Today, the Federal Reserve is resetting the game. The question is, will you understand the game and position yourself to win? Or will you keep playing catch-up while the people who understand how this system works keep getting ahead? It's all about taking control of your financial future. It's about making your money work for you. So here's the final push. Start now. Invest today. Even if it's a small amount, it's a start. Don't wait until it's too late, because if you do, you'll spend the next decade watching your money lose value while everyone around you builds wealth. The reset is coming. Make sure you're on the right side of it. Remember, the system is rigged, but it's rigged in a predictable way. Once you understand how the game works, you can position yourself to win. It's not about fighting the system. It's about playing it smart, knowing when to act, and making your money work for you. The rules are already set. You just need to learn them. Stay ahead, keep investing, and don't let the reset leave you behind. The future is built by those who understand the game and take action. Don't be the one watching from the sidelines. Make your move now.